Michael Cochran here with BentOak Capital to give you a brief update on the market and economy for October 2024. Please stay tuned until the end for an important disclosure statement. Last month, the Federal Reserve announced its first interest rate cut in over 4 years, reducing rates by 0.5 percentage point. This decision, that was a surprise to some, raises important questions about the Fed's future direction and its implications for the economy and financial markets. While the Fed's actions are significant, it's worth considering whether they have received excessive attention. Since the announcement, the yield on the 10-year Treasury bonds has actually increased, indicating that the bond market had already anticipated a substantial rate-cutting cycle. Projections suggest the Fed's target federal funds rate could decline from its current 5% to 3% by the end of 2025, bearing an unexpected recession, which seems unlikely in the near term. Consequently, the anticipated benefits of lower borrowing costs, such as reduced mortgage and auto loan rates, may have already been realized. The stock market also tends to factor in rate cuts ahead of time. The S&P 500 rose by just over 20% during the Fed's recent pause from July 2023 until September 2024, marking the strongest performance during a Fed pause in half a century across 9 cutting cycles. However, history indicates that once rate cuts begin, stock market returns may be more modest. On average, stocks have returned only mid-single-digit returns in the year following initial rate cuts. The overall economic environment will play a crucial role in determining future returns. When rate cuts coincide with economic growth, meaning no recession, stocks generally experience above-average gains. Historically, the S&P 500 has risen by an average 14% during the first year of such a rate-cutting cycle, and we have seen this a handful of times in the past 40 years. If the economy achieves a soft landing, which seems more likely than not, stocks could see further gains. Despite a low risk of recession, the approaching November elections introduces policy uncertainty, which has historically led to market volatility. In September, the stock market performed well, gaining 2% despite the month's typical weakness. This resilience suggests that the investors are focused on continuing economic growth, decreasing inflation, and improving corporate profits. However, with several $1 trillion in expiring tax cuts to be negotiated next year, ongoing concerns about unsustainable deficit spending, and strained trade relations with China, we may have seen increased market volatility regardless of the upcoming November election outcome. While the bull market is expected to continue as the economy expands, we wouldn't be surprised if the market paused and took a breather at these levels. Current stock prices reflect a considerable amount of favorable news while policy and geopolitical challenges persist. Additionally, there have been mixed economic reports, and the lingering effects of inflation are beginning to take their toll. As we conclude this month's video and enter the final quarter of the year, we want to emphasize our focus on year-end planning. Whether you just filed your 2023 taxes because of an extension or experienced a significant event this year that may warrant a discussion, please don't hesitate to reach out to your advisor. Additionally, keep an eye on our website for timely blog posts and follow our social media channels for relevant videos as we approach year-end. Here at BentOak Capital, our team is committed to delivering personalized service to you and your family, and we'd love to speak with anyone you think could benefit from our services.